Welcome to the bizval podcast. At bizval, we are passionate about empowering entrepreneurs the world over to understand and unlock the value in their business. We work with advisors and entrepreneurs to demystify the value creation process when building a business. At bizval, we know how tough it is to grow and run a business, which is exactly why we've made valuation simple to understand, accurate, and affordable. Our unique blend of tech and touch ensures that you always receive the best service, authentic human engagement, and data-led insights to ensure that you build a business that provides you with freedom and choice. In the bizval podcast, we showcase stories of real entrepreneurs and advisors, sharing lessons and inspiration from their journeys to make your journey just that little bit easier. Today, we're getting into a topic that sits behind almost every transaction, dispute, or exit that we see. But often, it only gets attention when something goes wrong, and that is tax. So I'm joined today by Michelle Tickner. She's a director at Sentinel International Advisory and someone who spent decades at the coalface of tax planning, dispute resolution, structuring. Michelle, it's wonderful to have you on the podcast today.
Yeah, thank you for having me, Graham. And I look forward to our chat.
Fantastic. Well, Michelle, as I said, we're going to start just a little bit with your background, kind of your story into tax. I mean, I think tax is not something most people, when they go around the classroom in grade one and say, "What do you want to be when you grow up?" Not many hands go up when the teacher says, "Who wants to be a tax advisor?" But we're going to go into your background, a little bit about how you got into where you are now. We'll talk a little bit about what you're doing at Sentinel and some of the sort of pitfalls that you see along the way. And then we're going to have a bit of a rapid fire section at the end just to get to know you a little bit more. So, Michelle, let's start right at the beginning. Before we get into your background, but you've been in tax since the sort of early 90s. What brought you into that in the first place?
Yeah, so Graham, I definitely didn't put my hand up for tax after I left school. So I actually first went to study BCom accounting. And at that stage, I actually had no idea that I would develop a love for tax. What I did know was that I was good at problem solving because when I did my aptitude tests before going to university, it was actually suggested that I study mechanical engineering. But in the early 90s, girls didn't actually go and study engineering. So I thought, no,
Mm,
best I just go into the accounting route. And also growing up, I was quite focused and driven through sport. And many people don't actually know that I also did gymnastics and Cicchetti ballet, and that I actually took part in provincial and national competitions every year. So from a very young age, I was very disciplined and focused, and that actually stayed with me throughout my career.
Yeah, I mean that's super interesting. A lot of the guests we've had on the show, I mean, I don't think you've mentioned it, but I believe you grew up in Bloemfontein. So we've had quite a few guests who've grown up in Bloemfontein, and we've also had quite a few guests who, sport has been a big part of their growing up experience. And I think you touched on something there about being disciplined and focused and all of those sorts of things. So maybe let's go back to that, sort of your early growing up
Mm.
years, one growing up in a town, which I guess there's not much to do. I'm joking. My wife is from Bloemfontein, so and the other part about Bloemfontein, which maybe some of our international guests may not know, is it's known as the City of Roses. So, but growing up in Bloemfontein, being involved in sport, maybe share some of those sort of early experiences, I guess that grounded you and kind of shaped you in those early years.
Yeah, I suppose I don't always tell people that I'm from Bloemfontein and that I studied at the Free State University because
Wow.
apparently, if you live in Cape Town, there's only one university, and that's UCT. And the other universities are not universities. But I'm actually grateful that I got to grow up in a city like Bloemfontein. I didn't go to one of the girls' schools in Bloemfontein. I just went to the closest school to where we lived. I
Mm,
cycled to school or I walked to school. Um, my friends grew up with me since sub A or grade one. And I was actually part of the first class at Vichard Park High School
Wow.
that completed matric because it was a new school.
Mm-hmm.
So we were the first grade eights, standard sixes that actually went through to grade 12 or standard 10. So I grew up quite protected, not much to do. Um, the gymnastics most days, many
Mm.
hours, as well as ballet. Didn't have time to go out to parties as such. Um,
Mm.
very protected, but I loved it.
Yeah, I think there's something to be said about growing up in, and Bloemfontein's a city, but it's kind of almost like a big town, right?
Yes.
And we see a lot of that is, there are very few distractions. So there's a lot of focus on relationships. There's a lot of focus on, doing something, to a point of excellence in a way. And I can relate to that gymnastics story. My daughter is a gymnast and a dancer and that as well, and it keeps you busy. So it also teaches you focus. And I suppose later in your career, we'll come to that a little bit later. I'm sure those learnings around relationships, around focus, around problem solving, kind of sticking out the sometimes the
Yes.
boredom and the hard times, shapes you as a person. So I want to
Yeah, for
move on a little
sure.
bit from there. So you spoke about, getting into tax and accounting almost by default, so, as you say, in the mid 90s, it
Hmm.
wasn't that easy for a woman to just say, hey, I'm going to go study engineering. So you picked the sort of accounting tax exposure, but after studying, what happened from there? How did you go from having done your degree in accounting to getting into tax advisory?
So it didn't actually happen immediately because I wasn't sure that I actually wanted to have a career in accounting. And
Hmm.
I then decided to go and study tourism. And I actually completed my tourism studies in 1997. And
Sure.
then I realized that with that qualification, I could actually just go and work behind a reception desk. And I
Hmm.
wasn't going to do that. So that pushed me back into accounting. And I actually worked at a audit slash accounting firm from 1997 until about 2002 when I moved to Cape Town and I
Hmm.
joined another audit firm in Cape Town, but I actually worked in their tax department. And then only after attending a presentation where Deborah Tickle was actually the speaker at the event, and she was the head of tax at
Hmm.
KPMG Cape Town at that point, that I actually realized that I wanted to work in tax. And I then went on to study a HDIP tax and a HDIP international tax. And it was always in the back of my head that I wanted to work for Deborah Tickle. And I was lucky enough to join KPMG in 2006. And then I had the opportunity to work with Deborah Tickle.
I mean, we often talk about people who influence us along the way, and obviously, Deborah was quite an influence on you. I mean, can you share a little bit about that? As I say, in South Africa at least, everyone thinks you have to go and become a chartered accountant if you want a career in finance or tax or whatever. And yeah, it may have been the case 20, 30 years ago. It was almost this kind of like halo effect around it, but I think we're seeing more and more that that's not necessarily the case. And actually, sometimes it's better to follow a different path, HTIP tax and what have you. The CA isn't the sort of silver bullet to career
Mhm.
success. But maybe you can touch on those two things. One is, your choice not to go the CA route and then go into the sort of tax route. And then the actual influence that Deborah had, what was it about that talk and what have you that was so inspiring to you?
Mhm. So I think it helps if you are a CA, but you don't have to be a CA.
Mm,
Most people that work in tax actually has a legal background or a law background. I
mm,
think it's more beneficial if you have a law background to go into tax. But even if you don't, there are other ways of actually obtaining tax qualifications. You can study through UNISA and do a postgraduate in taxation there.
mm.
Um, so you don't have to follow the legal or the law or the accounting way of working in tax. And I also think You could be an engineer, for instance, and work in
Mm,
tax because engineers are good at problem solving. And if you're good at problem solving, you can actually work in tax as well.
mm, mm,
Um, yeah, and so when I met Deborah, I just love the way she actually held the audience together when she presented her topic, and she was so knowledgeable, and everyone knew who she was. And
mm,
that was quite inspirational for me as a young woman.
mm,
And I just felt, I wish I could be like Deborah one day, successful, confident, and really know my topic.
mm, mm. And I think it's easy to look back now in sort of our current world, but I guess back in the early 2000s, late 90s, there weren't a lot of, let's call it, senior female role models across the professional spectrum. It's not as ubiquitous as it is today. And I think, I guess seeing someone like that who had been successful, and at that stage it was a lot harder, in a male-dominated environment. I guess there was a resonance with that, Michelle.
No, for sure. But I must say, I do notice that there are more females working in tax than males. I think females are just better at managing admin skills as well, and I think that's quite helpful when you work in tax.
Yeah, I think also maybe there's a degree of flexibility there which exists. If you think of the chartered accountant route or the audit route, and that, not to say that it is the case, but you're driving a lot harder in terms of deadlines and projects and what have you. And sometimes, having a bit more flexibility helps, and also that sort of problem solving across domains. I guess that's something which in the tax world is really, really important. You're not just looking at one set of rules, you're looking at rules across you know, business, across
Different,
law,
yeah.
across jurisdiction, and that's
Yeah.
something which I guess is quite challenging, but also interesting at the same time, right?
No, for sure. It's definitely not boring.
So I want to talk a little bit about that. So I think a lot of people have this perception tax is just about rules. It's about the law. And often take a very compliance view about tax. So, as long as my tax returns are in on date, I've done my VAT, I've done my employees tax, I've done all of those sorts of things. But it goes a lot deeper than that. Can you share a little bit about, you know, for you, how you moved or, the needle from just tax being a compliance function into one being an advisory function. How do you see that?
Yeah, so basically, I started my journey in the tax compliance department at KPMG, basically as a junior consultant. And at the end of my journey with KPMG, I was a manager of the tax compliance department. But I
Mm,
always knew that my long-term goal was to move into advisory, the advisory side of tax. Especially working with ultra high net worth individuals and high net worth individuals, trust and
mm,
estate planning. Because I really enjoy um, helping families structure their wealth preservation
mm,
and making sure their assets pass to the next generation in the
mm,
most tax efficient way possible. And
mm,
that's why I was grateful when I got the opportunity in 2012 to actually leave KPMG and start my own practice within Sentinel.
mm, mm,
At the time when I left, I had 110 tax compliance clients when I started with Sentinel. And I was basically busy for 3 months of the year. So the rest of the year, I had time off to actually then focus on my family, um, and especially my son, who was then a toddler. But it was
mm,
also very incredibly daunting and stressful at first
mm,
because I only had 110 clients and I wasn't sure if I would actually make this work and make a success of it. But I
mm,
was very lucky in that in the first year, I actually grew my client base to about 200 individuals. And that was basically my bread and butter for the first couple of years. And it gave me
Mm.
an opportunity to rather start moving into the advisory or the consulting side.
What does that look like, Michelle? So when we talk
Mm.
about, I think everyone understands tax compliance. You got your provisional tax once a year, you've got your year end, and as you say, it's a very intensive period for a few months of the year.
Yes.
But it's quite rearward looking in a way, right? You're thinking about what do you owe and have you paid enough?
Mhm.
But let's talk about tax advisory. What does that actually mean? What does it look like from a day-to-day point of view?
Yeah, so basically, at Sentinel, my day-to-day activities is I sit in a lot of management meetings at Sentinel, but
Mm,
I also sit in a lot of client meetings. The client meetings are mostly focused on estate planning. We
mm.
do a lot of living estate duty calculations for clients. And then we also advise on tax residency. So it's almost like you first have to do the living estate duty calculation so that the clients can see where they are currently, get a shock, and then
Mm,
realize that they need to do some estate planning.
mm,
Um,
mm,
and yes, it is. Tax compliance is historical and it's also not very, very sexy.
mm.
Um, and it's a lot nicer for me to be in meetings, interacting with clients, and actually solving their problems.
Yeah, and I think you've touched on a few things there. This is kind of where it intersects with the valuation piece. We see this with a lot of valuation clients, is that it's about looking into the future, not looking in the past. And I guess this is where, how we engaged and where the two sort of intersect is that the implications of what you do now for something that's going to happen 5 or 10 years down the line, whether it's an exit, whether it's a death in the family, whether it's a shareholder leaving, has significant implications. And often those are leveraged. And that's why I guess planning in advance is so important. And the more valuable your business and the higher net worth you are, it's not about tax avoidance or it's a tax evasion. It's about making sure that your affairs are actually, first and foremost, I guess, structured appropriately so that there's no surprises down the line when you need to pass things on to your family or legacy, whatever the case might be. But why, given that it's so important, why is it that so many people, do you think, treat it as an afterthought? Because, I mean, you see that often, right? You do the planning, and for every person you've done appropriate planning for, you get a situation where it hasn't been done, right? Why do people postpone this and think of it as something that, I'll deal with it when I sell my business, not
Mhm.
5, 10 years in advance?
Yeah, so I think many people actually think that tax advice is expensive.
Mm,
And as a result of that, it's just a nice to have rather than a necessity. But an early conversation is really important. If I can use an example, um, if you have the conversation about how to structure your shareholding from the beginning when your business is worth nothing,
mm,
um, then at least you have the opportunity to think, should I use a trust?
mm,
How do I peg that growth of that business for the future generations or for estate duty purposes? And a
mm.
lot of people actually don't do that. A lot of them just want a quick fix when things have already gone wrong. And then it's
Yeah.
not so easy to fix it. You can fix it, but it's not a fix that's going to get rid of all your tax issues at once.
Mm. Yeah, and
So,
I think nowadays as well, it's the world has got a lot more complex in some ways. It's not a guarantee that your kids are going to be living in the same country as you've been living in. There's immigration, there's people spending part of the year in an overseas jurisdiction and all those sorts of things. So I think it's become a lot more almost in a way like that's the norm nowadays. If you went back 40
yes.
or 50 years ago, your kids would live in the same town as you. So these things weren't necessarily as critical, but now the world's a lot more complex. Governments
across the world. There's a lot more cooperation, double tax agreements, all those. So there's a lot more to think about. So it's not about necessarily just minimizing taxes, it's about making sure that kind of all those things line up. You've thought through the permutations, and if something happens, both positively or negatively, it could be a death, it could be a sale of a business, that you properly set up and there's no surprises down the line, right?
No, that's very true. It's also important to, when you plan, to know where the family are living, um,
Mm,
where the children are planning to move to, etc. Like you say, because you can't just look from a South African perspective. You have to have an international perspective.
yeah.
Um, some of the jurisdictions, for instance, don't like trusts and they don't like
Mm,
their residents receiving distributions from trusts.
mm,
How do you structure the trust distributions differently to them? How do you get their inheritances to them rather than a trust distribution?
yeah.
So it gets very complicated and it also gets very interesting.
Yeah, and I guess those laws aren't static. What might be a set of tax laws or tax regime now may change in 5 years or 10 years. So it's not as though it's something you can do once and then put it in file 13 and forget about it. It's probably something you have to review every year
And
or
then,
every couple of years.
yes, for sure, for sure.
Michelle, one of the things I want to talk about is just some of the common, and I think this will make it practical and real, but what are some of the sort of common pitfalls and mistakes that people make, whether they're business owners or employees, when thinking about tax planning? So let's get practical. You're a business owner or a high net worth individual. What are the sort of top 3 or 4 mistakes that you would want people to avoid making when it comes to tax planning?
Well, firstly, I'll go back to do proper planning, because we see a lot of these business owners are just solely focusing on growing their businesses and making it profitable, but they
Mm,
actually don't think about how they should have structured it from the beginning to make
mm,
it profitable, if I can call it that way, from an estate duty perspective as well.
yeah.
And then when they start thinking about these things, their businesses are worth millions already, and now it's
Mm,
more difficult to plan, and to reduce the estate duty tax implication. So it's still possible, but it isn't actually a magic fix. A lot of these business owners think, oh, well, let me just do a Section 42 and that's going to resolve all my issues. But it
mm.
doesn't actually. People don't understand it. So I would say do proper planning, spend an hour consultation with a tax advisor, speak to them, see what they think, so that you can actually put things in place earlier than later.
Yeah, I guess the point is that particularly in the sort of modern jurisdiction where things like capital gains tax are really important, or estate tax. If you rewound a world 30, 40 years ago, a lot of those, let's call it wealth taxes, didn't exist.
Yeah.
Or if they did, they had a fairly minimal effect. But I think globally, there's been a push towards wealth taxes. If you look at what's going on in the UK at the moment with asset relief and business protection relief. So it's becoming more prominent. So the implications of getting it wrong, I guess, are bigger than ever. And as you say, when you're building a business, and this is where the value intersection comes in, is if you do the planning when your business is still growing and the value is lower, you've got a lot more choices down the line. Once that value is already there, there's often not a lot you can do about it. So I think that's really, really important. Let's talk a little bit about some of the mistakes, perhaps in you know, talking about trusts perhaps and
Mhm.
cross-border structuring. What are some of the pitfalls and the things that people don't always think about in that space?
Yeah, so we've seen a lot of people who set up local or offshore trusts, but they don't
Mm,
actually know that there could be an ongoing South African tax consequence for them,
mm,
just by the way that they fund these trusts, by way of a loan or a donation. So there are anti-avoidance rules in our tax legislation, and those rules will attribute income back to the financier
Mm,
of the trust, and people don't realize that. Many people think if they have an offshore trust, they will only pay taxes on it once they receive a distribution from that trust, and that's not true.
mm,
So we see a lot of that. We actually do a lot of voluntary disclosure applications specifically for people falling foul of the attribution rules, especially with offshore trusts.
mm,
We also see that they've got all these offshore structures in place, but the costs, the tax costs and the administration costs are so high that it's actually not worthwhile having those structures in
mm,
place. So we have actually advised people to close down trusts. Although we are actually in the trust space, we are not trust salespeople, if that makes
mm.
sense.
So I guess on the trust, there's almost a threshold if, in terms of your net wealth, where the costs of running some of these complex structures
Mhm.
are not worth the upside. So this notion of, oh, just set up a trust and you'll be fine is not always the best advice. And you need to understand, where on that scale do you sit? And is it actually the appropriate structure? Because yeah, I think you're absolutely right. There are a lot of advisors out there who will sell a trust because they make money off it.
Yeah.
But it's actually not in the client's best interest, right?
Or in the beneficiaries.
Yeah,
Because the main
exactly.
objective of the trust is for the trustees to look after the beneficiaries.
Yeah. And do you see the tax authorities, and this is maybe a direct question, because a lot of people think, oh, the SARS is never going to come off. It's a different story. We do work cross border. So, when you work with HMRC in the UK or IRS in the US, I mean, actually enforcing a lot of these rules is, you see it happening. Whereas I think a lot of South Africans perhaps think, "Oh, I'll take the chance, I'll get away with it." Do you see tax authorities becoming more, I wouldn't say aggressive, but more sophisticated in how they are, actually looking and monitoring and trying to find loopholes and gaps in people's planning? And I guess in the world of AI,
For
the
sure.
authorities have a lot more tools at their disposal. So how would you kind of think about that when you're sitting in front of a client and advising them on their tax structuring?
Yeah, so we sit in many meetings where we get the question, but how would SARS know?
Hmm.
Still in today's day where everyone is signed up for CRS, common reporting standards. The banks are reporting to SARS, the banks are reporting to other authorities, the deeds office is reporting to SARS. Apparently, the overseas deeds officers are also reporting to SARS. So there's
Hmm.
this global database of what people own, of where people live. As you
Hmm.
know, you can't open a bank account without doing your FICA, proving that
Yeah.
you live in Cape Town, South Africa, in London. So that information is out there. Um,
Hmm.
so yeah, if we, yeah,
Don't take a chance. It's a bit like your digital
yeah, don't
footprint,
take
right?
a chance. I mean, SARS
Exactly.
will know.
Yeah. Yeah,
Uh,
exactly. So maybe moving from there, you've spoken about some of the sort of things that people get wrong. They take a chance. They don't plan in advance. They don't understand the sort of leverage effect. They don't understand the implications of trusts and the costs associated with that. I mean, I always like to dive into the sort of the horror stories, without mentioning any names in that, Michelle. I mean, can you share one or two perhaps, you know, cases or situations where it went horribly wrong? I mean, maybe you were brought in on the tail end to try and resolve it. Because I think sharing a story like that or two actually just helps people
mm.
contextualize why this is so important.
Yeah, so recently I met with a client and I assisted her with a tax immigration.
Mm,
And she also got this notice from SARS for an outstanding tax bill of almost R1 million, and she wasn't actually sure where it was coming from.
mm,
And when we started investigating it, we discovered that she's involved in a family trust, and that the family trust actually made a distribution to one of the beneficiaries of that trust,
mm,
which was not her. But the accountant who actually completed the tax return completed the incorrect tax reference number in the trust tax return, and he disclosed her tax reference number and not the other beneficiary's tax reference number. And this has had severe tax implications for her,
mm,
as SARS had just used the information that was provided on the trust tax return and
mm,
pre-populated it to her tax assessment, because everything is linked
mm,
today. So whatever you complete on your trust tax return actually will flow through to your individual tax return, and it's pre-populated. And SARS has now said that that is a final tax assessment, which means that she cannot object to this incorrect assessment,
mm.
which has caused a lot of headaches. We are actually now at a stage where we've engaged a tax lawyer to assist us in resolving this issue, because SARS is now also taking civil judgment against her. So it's just important to know that whenever someone completes your tax return, even if it's the trust, you need to check that all the information is actually completed correctly. You can't just
Mm,
rely on professionals to complete the correct information.
mm,
So check it. Make sure that it is correct, so that you can make the changes before it goes down that rabbit hole where you have to now try and fix something with SARS, and it's going to take months to resolve.
I guess the lesson in that is as much as you need to work with professionals, is you can't completely, when it comes to tax, you can't completely outsource that to the professionals and then wipe your hands and say, oh, well, I
Yes.
consult the professionals. It's around actually, you need to be vigilant. And I guess when it comes to tax planning, there's also, for the ordinary person in the street, is there's probably a degree of keep things simple. If your structure looks overly complex in terms of the size of your estate and your wealth and all of that sort of stuff, is don't just don't just assume that it's right. Okay. Ask questions of your advisors and make sure you understand as a client how it impacts you. Because I was going to ask you, how could that situation have been avoided? I mean, obviously it's down the line I guess it was diligence up front, and not just kind of handing it off to the professionals. I mean, we are all professionals, but you as a client or a taxpayer have got a responsibility to understand what's being done on your behalf, right?
No, very true. And also make sure that your details are always updated with SARS.
Yeah,
Um, because the notifications went to her, but to an old email address. So she never
mm,
actually received the notification. So
yeah.
it's very important to keep your details updated with SARS as well.
Mm. Yeah, I think it's and often it's not complicated stuff that goes wrong, but it's stuff that we all taxpayers ourselves, you're right, that we tend to forget about. And I guess in this world of technology where these things are triangulated very quickly, it's easy just to kind of also I forgot about it. So, those are the
Mm,
things I guess in your proactive planning when you're sitting with your advisor or your tax consultant, almost have a checklist of things that you go through in that annual review and say, I've got a trust, I've got this, I've got that. It's almost keeping things simple and keeping it basic and like you would set up a meal plan if you're going on a diet. Okay.
no,
You'd
for
almost do
sure.
that same thing with your tax advisor at the beginning of every year, right?
No, for sure.
Yeah.
So we
Michelle?
basically do that as trust officers of trust. We actually have a point on the agenda every year where we actually check. There's specific tick boxes that we have to check about the family. Where do they live? What other structures do they have? Does it still
Yeah.
work? Etc.
Absolutely. Michelle, a couple more sections I want to just quickly talk about. We spoke earlier on about Deborah and how she was such an influence in your career and decision to go into tax. So just bringing it back to people and partnerships. I think we met a few years ago. It was at a KPMG family office planning event where we connected.
Yes,
And
right.
in the world we operate in, it is a lot about relationships. It's working with other advisors, other lawyers, other fiduciaries. Can you just talk a little bit for you how important those, finding the right partners are and the importance of partnership in this world, because tax touches on a bunch of things. It's not just the tax laws, somebody selling their business, somebody thinking about family planning, all of those sorts of things. How do you go about thinking about which sort of advisors and partners that you want to work with?
Yeah, so we work with many colleagues in the industry. Um, we usually don't pretend that we know everything, and that's why we like to have a strong network of tax consultants, lawyers, or
Mm,
fiduciaries. And we've actually built these relationships over many years,
mm,
and they are actually grounded in mutual respect. So when we
mm,
choose advisors to work with, we look for strong technical skills, integrity, practical thinking, and we
mm,
also look at how they treat clients.
mm,
Because relationships are a core skill in our business, and we don't have customers or clients, we have relationships. And
mm,
Sentinel actually means guardian, and we actually guard our relationships with our lives. So it's very
mm,
important to see how the relationships will work with the different people that we partner with. So we
mm.
make sure that the client actually fits into that specific relationship um, or personality.
I think that's so important because there's lots of advice. It doesn't mean you should be working with everyone. It's are the associates and people you working with and referring your clients to for accounting support or trust support, whatever the case might be. Do they fit into that same ethos? And I think from a bizval perspective, we've got a very similar approach as well. We're very selective in terms of which partners we want to work with. And for us, it's very similar. The human relationship's important, and particularly in the world of AI and technology and all of that sort of stuff, it comes down to people at the end of the day. It comes down to explaining things in a very pragmatic and simple way, often complex topics that the client or the person at the end actually understands the implications of that. And then importantly, acting in the client's best interest at all times. And, it's the sad reality is not all advisors operate in that way. I think often they operate in their best interests and not the client's best interests. So I think we share that in terms of sort of a value system and how we work with clients. So and ultimately, if you've got that, you've got a business that's built on trust and mutual respect. So, yeah, I think that's a really important point. Um, Before we wrap up, I just want to go on very quickly a little bit about Sentinel. You spoke about it at the beginning, okay? But I want to give you an opportunity to do a little bit of selling, if you want to call it
Okay.
that. So if you can spend a couple of minutes just talking about what you do at Sentinel specifically, what you focus on, and where you add the most value. So if anybody's listening in here today and they're thinking, well, maybe I should have a chat to Michelle, now's your opportunity to tell them why.
That's great. Thank you, Graham. So Sentinel is a medium-sized fiduciary company, and we have offices in Johannesburg, Pretoria, Durban, and Cape Town. So our core business is acting as an independent trustee, and we also manage the trust administration. And flowing from the independent trusteeships, we actually also do the trust accounting, we do tax compliance, and then we do individual tax compliance as well. We
Mm,
do accounting and tax work for small companies, but they're mostly investment companies and linked to the trust that we look after. So I work in the tax planning and consulting department, And we basically get involved with pre-cross-border structuring. We do some cross-border beneficiary planning and we attend to tax residency matters. So how it will work is our trust officers will usually pull us into a meeting when they have their trust meetings, especially if the family is thinking of either moving abroad or setting up a business abroad or just thinking of putting up a structure overseas just to hold investments. Then we get pulled in. We looked at the jurisdictions. We help them with the planning. We make sure that if there's a trust involved, that the beneficiaries are living in jurisdictions where they can receive trust distributions. If they
Yeah,
can't, then we plan around that. We would rather set up a company. So it gets quite interesting, but it can be complex as well. So,
fantastic. So at the end of the day, basically, you making sure that people both plan their tax and their estate and their structures appropriately, and particularly when it comes to trusts, and are proactive around thinking about what those structures look like now. And I guess there's an annual review as well, where you continually evaluate whether those structures and that tax advice is still relevant and up to date, because we're living in a world where tax laws essentially change every year. I think all
no,
countries
for
are like
sure.
that. So,
No, for sure.
Michelle? Yeah, 100%. So, okay, to close off, we're going to do what we call our rapid fire section. It's just a few quick questions. And I've got 5 questions for you today. So, the first thing I'm going to ask you, and keep it short, keep it sweet, first thing that comes to
Yeah.
mind. What is the biggest misconception when it comes to tax and tax planning?
I think that tax planning is only for wealthy people, and that's not true.
Absolutely. I think, yeah, tax impacts all of us. And the implication for everybody, right, is it's always leverage compared to what you're doing now. So it's talking tax, especially estate taxes, that are talking about compound value as opposed to just 15% VAT on a
Yes.
transaction, right? So that's why it's so important, I guess. Um, what is the one thing that business owners ignore that they shouldn't?
I think they should make that appointment, do some tax planning so that they can actually look at their structuring from day one and then come
Mm,
up with a plan.
mm.
If it's not
So
an
it's a
immediate plan, then they can have a plan that can be implemented at a later stage.
So it's a bit like, don't just go to the doctor when you're sick.
Hmm.
Go and have an annual checkup so that you can preemptively see if there's something that's going wrong or you need to adjust in your diet or your health regime or your sleep or whatever it might be.
Yes.
What's the best piece of advice that you've personally received, Michelle?
I think it's that you don't have to know everything.
Mm,
As long as you have a strong team,
mm,
um, and you trust your team, then you don't have to be the strongest technician in the room.
mm. I think that's so important. So I think a lot of people feel the need, even if they don't know the answer, to make up an answer. I've always had a mentor once who said to me, if you don't know the answer, let's say you're a junior reporting in a board meeting and the CEO says to you, well, what's the answer? A lot of people feel under pressure to make something up. But
Yeah.
often the best thing you say, I don't know, but I can find out, or I don't know, but I can refer you to somebody who knows the answer. I think that's so powerful.
Mm. Totally agree.
If you weren't in tax, maybe you gave this answer up front, but if you weren't in tax, what would you be doing?
I think I would still be in something where I have to solve problems, maybe in sport or coaching, I would imagine. I
So not
still
not in not in
miss my
engineering.
sport days.
The last question to you is, what's one habit that you've picked up or learned or nurtured over the years that you think has made you effective in your career?
one must always be prepared. Never walk into a meeting unprepared. And I
Mm,
always say, future Michelle will always be grateful for the actions of past Michelle. So that work that you're doing over the weekend to prepare for something,
mm.
future Michelle will be grateful for the actions of past Michelle.
I love that. It's about learn from the past, learn from history. I suppose humankind could take a lesson from that. Is history doesn't repeat itself, but you can learn from history and plan accordingly, right? And that applies at a micro and at a macro level. Michelle, it's been absolutely wonderful to have you on the show. I think there's a clear theme that's come through from today. It's about being prepared. Yeah, tax is really the problem, and until it is. And also this notion of if you get it wrong down the line, the impact is often more significant. So plan ahead, think about it, go and consult a professional. The few thousand rand you're going to pay for a consultation is going to be a lot less than having to suddenly pay 20% gains tax on a 20 million rand exit, right? So do that in advance. If any of our listeners want to get hold of you, what would be the best way to reach out, Michelle?
So the best way will be to either email me, Michelle T at sentineltrust.co.za, or they're welcome to give me a call, 082 And my office is
Michelle,
in Newland, so if they want to pop in, they're welcome to.
fantastic. Michelle, thanks for joining us again today. And to everyone listening, if you're thinking about a transaction, a restructure, or just getting clarity on, what your tax planning and your estate planning looks like, this is definitely one area that's worth getting in front of. And you know who to call if that's you. So we'll see you again on our next episode. And thanks for joining us today.
Thank you, Graham.